You couldn't. Asked Elmer, beginning to look doubtful himself. It is a habit with most tip givers to be tip takers. No, I couldn't. Why not? And Elmer drew nearer. Why, this is a bull market. The old fellow said it as though he had given a long and detailed explanation. That's all right, said Elmer, looking angry because of his disappointment. I know this is a bull market as well as you do, but you'd better slip them that stock of yours and buy it back on the reaction. You might as well reduce the cost to yourself. My dear boy, said Old Partridge in great distress, my dear boy, if I sold that stock now I'd lose my position, and then where would I be? Elmer Harwood threw up his hands, shook his head, and walked over to me to get sympathy. Can you beat it? He asked me in a stage whisper. I ask you one. I didn't say anything, so he went on. I give him a tip on Climax Motors. He buys 500 shares. He's got 7 points profit, and I advise him to get out and buy 'em back on the reaction that's overdue even now. And what does he say when I tell him? He says that if he sells, he'll lose his job. What do you know about that? I beg your pardon, Mr. Harwood. I didn't say I'd lose my job, cut in Old Turkey. I said 53. Reminiscences of a stock operator, I'd lose my position. And when you are as old as I am, and you've been through as many booms and panics as I have, you'll know that to lose your position is something nobody can afford, not even John D. Rockefeller. I hope the stock reacts, and that you will be able to repurchase your line at a substantial concession, sir. But I myself can only trade in accordance with the experience of many years. I paid a high price for it, and I don't feel like throwing away a second tuition fee. But I am as much obliged to you as if I had the money in the bank. It's a bull market, you know. And he strutted away, leaving Elmer dazed. What old Mr. Partridge said did not mean much to me until I began to think about my own numerous failures to make as much money as I ought to when I was so right on the general market. The more I studied, the more I realized how wise that old chap was. He had evidently suffered from the same defect in his young days and knew his own human weaknesses. He would not lay himself open to a temptation that experience had taught him was hard to resist and had always proved expensive to him, as it was to me. I think it was a long step forward in my trading education when I realized at last that when old Mr. Partridge kept on telling the other customers, well, you know this is a bull market, he really meant to tell them that the big money was not in the individual fluctuations, but in the main movements, that is, not in reading the tape, but in sizing up the entire market and its trend. And right here let me say one thing. After spending many years in Wall Street, and after making and losing millions of dollars, I want to tell you this. It never was my thinking that made the big money for me. It always was my sitting. Got that? My sitting tight. It is no trick at all to be right on the market. You always find lots of early bulls in bull markets and early bears in bear markets. I've known many men who were right at exactly the right time, and began buying or selling stocks when prices were at the very level which should show the greatest profit. And their experience invariably matched mine, that is, they made no real money out of it. Men who can both be right and sit tight are uncommon. I found it one of the hardest things to learn. But it is only after a stock operator has firmly grasped this that he can make big money. It is literally true that millions come easier to a trader after he knows how to trade than hundreds did in the days of his ignorance. The reason is that a man may see straight and clearly, and yet become impatient or 54. Reminiscences of a stock operator doubtful when the market takes its time about doing as he figured it must do. That is why so many men in Wall Street, who are not at all in the sucker class, not even in the third grade, nevertheless lose money. The market does not beat them. They beat themselves because though they have brains, they cannot sit tight. Old Turkey was dead right in doing and saying what he did. He had not only the courage of his convictions, but the intelligent patience to sit tight. Disregarding the big swing and trying to jump in and out was fatal to me. Nobody can catch all the fluctuations. In a bull market, your game is to buy and hold until you believe that the bull market is near its end. To do this, you must study general conditions and not tips or special factors affecting individual stocks. Then get out of all your stocks, get out for keeps. Wait until you see, or if you prefer, until you think you see the turn of the market, the beginning of a reversal of general conditions. You have to use your brains and your vision to do this. Otherwise, my advice would be as idiotic as to tell you to buy cheap and sell dear. One of the most helpful things that anybody can learn is to give up trying to catch the last eighth or the first. These two are the most expensive eighths in the world. They have cost stock traders, in the aggregate, enough millions of dollars to build a concrete highway across the continent. Another thing I noticed in studying my plays in Fullerton's office, after I began to trade less unintelligently, was that my initial operations seldom showed me a loss. That naturally made me decide to start big. It gave me confidence in my own judgment before I allowed it to be vitiated by the advice of others, or even by my own impatience at times. Without faith in his own judgment, no man can go very far in this game. That is about all I have learned to study general conditions, to take a position and stick to it. I can wait without a twinge of impatience. I can see a setback without being shaken, knowing that it is only temporary. I have been short 100,000 shares, and I have seen a big rally coming. I have figured correctly that such a rally as I felt was inevitable, and even wholesome, would make a difference of $1 million in my paper profits. And I nevertheless have stood pat and seen half my paper profit wiped out, without once considering the advisability of covering my shorts to put them out again on the rally. I knew that if I did I might lose my position, and with it, the certainty of a big killing. It is the big swing that makes the big money for you. If I learned all this so slowly, it was because I learned by my mistakes, and some time always elapses between making a mistake and realizing it, and more time between 55. Reminiscences of a stock operator realizing it and exactly determining it. But at the same time, I was faring pretty comfortably and was very young, so that I made up in other ways. Most of my winnings were still made in part through my tape reading, because the kind of markets we were having lent themselves fairly well to my method. I was not losing either as often or as irritatingly as in the beginning of my New York experiences. It wasn't anything to be proud of, when you think that I had been broke 3 times in less than 2 years. And as I told you, being broke is a very efficient educational agency. I was not increasing my stake very fast because I lived up to the handle all the time. I did not deprive myself of many of the things that a fellow of my age and tastes would want. I had my own automobile, and I could not see any sense in skimping on living when I was taking it out of the market. The ticker only stopped Sundays and holidays, which was as it should be. Every time I found the reason for a loss or the why and how of another mistake, I added a brand new don't to my schedule of assets. And the nicest way to capitalize my increasing assets was by not cutting down on my living expenses. Of course, I had some amusing experiences and some that were not so amusing, but if I told them all in detail, I'd never finish. As a matter of fact, the only incidents that I remember without special effort are those that taught me something of definite value to me in my trading, something that added to my store of knowledge of the game and of myself. 56. Reminiscences of a Stock Operator, Chapter VI. In the spring of 1906, I was in Atlantic City for a short vacation. I was out of stocks and was thinking only of having a change of air and a nice rest. By the way, I had gone back to my first brokers, Harding Brothers, and my account had got to be pretty active. I could swing 3,000 or 4,000 shares. That wasn't much more than I had done in the old Cosmopolitan shop when I was barely 20 years of age. But there was some difference between my 1-point margin in the bucket shop and the margin required by brokers who actually bought or sold stocks for my account on the New York Stock Exchange. You may remember the story I told you about that time when I was short 3,500 sugar in the Cosmopolitan, and I had a hunch something was wrong and I'd better close the trade. Well, I have often had that curious feeling. As a rule, I yield to it. But at times, I have pooh-poohed the idea and have told myself that it was simply asinine to follow any of these sudden blind impulses to reverse my position. I have ascribed my hunch to a state of nerves resulting from too many cigars or insufficient sleep or a torpid liver or something of that kind. When I have argued myself into disregarding my impulse and have stood pat, I have always had cause to regret it. A dozen instances occur to me when I did not sell as per hunch, and the next day I'd go downtown and the market would be strong, or perhaps even advance, and I'd tell myself how silly it would have been to obey the blind impulse to sell. But on the following day, there would be a pretty bad drop. Something had broken loose somewhere, and I'd have made money by not being so wise and logical. The reason plainly was not physiological but psychological. I want to tell you only about one of them because of what it did for me. It happened when I was having that little vacation in Atlantic City in the spring of 1906. I had a friend with me who also was a customer of Harding Brothers. I had no interest in the market one way or another and was enjoying my rest. I can always give up trading to 57. Reminiscences of a stock operator play, unless of course it is an exceptionally active market in which my commitments are rather heavy. It was a bull market, as I remember it. The outlook was favorable for general business, and the stock market had slowed down, but the tone was firm, and all indications pointed to higher prices. One morning after we had breakfasted and had finished reading all the New York morning papers, and had got tired of watching the sea gulls picking up clams and flying up with them 20 feet in the air and dropping them on the hard, wet sand to open them for their breakfast, my friend and I started up the boardwalk. That was the most exciting thing we did in the daytime. It was not noon yet, and we walked up slowly to kill time and breathe the salt air. Harding Brothers had a branch office on the boardwalk, and we used to drop in every morning and see how they'd opened. It was more force of habit than anything else, for I wasn't doing anything. The market, we found, was strong and active. My friend, who was quite bullish, was carrying a moderate line purchased several points lower. He began to tell me what an obviously wise thing it was to hold stocks for much higher prices. I wasn't paying enough attention to him to take the trouble to agree with him. I was looking over the quotation board, noting the changes they were mostly advances until I came to Union Pacific. I got a feeling that I ought to sell it. I can't tell you more. I just felt like selling it. I asked myself why I should feel like that, and I couldn't find any reason whatever for going short of UP. I stared at the last price on the board until I couldn't see any figures or any board or anything else for that matter. All I knew was that I wanted to sell Union Pacific, and I couldn't find out why I wanted to. I must have looked queer, for my friend, who was standing alongside of me, suddenly nudged me and asked, "Hey, what's the matter?" "I don't know," I answered. "Going to sleep," he said. "No," I said. "I am not going to sleep. What I am going to do is to sell that stock." I had 58. Reminiscences of a stock operator always made money following my hunches. I walked over to a table where there were some blank order pads. My friend followed me. I wrote out an order to sell 1,000 Union Pacific at the market and handed it to the manager. He was smiling when I wrote it and when he took it. But when he read the order, he stopped smiling and looked at me. "Is this right?" he asked me. But I just looked at him and he rushed it over to the operator. "What are you doing?" Asked my friend. "I'm selling it," I told him. "Selling what?" he yelled at me. If he was a bull, how could I be a bear? Something was wrong. 1,000 up, I said. "Why?" he asked me in great excitement. I shook my head, meaning I had no reason. But he must have thought I'd got a tip because he took me by the arm and led me outside into the hall where we could be out of sight and hearing of the other customers and rubbering chair warmers. "What did you hear?" he asked me. He was quite excited. Up was one of his pets, and he was bullish on it because of its earnings and its prospects, but he was willing to take a bare tip on it at second hand. "Nothing," I said. "You didn't." He was skeptical and showed it plainly. "I didn't hear a thing." "Then why in blazes are you selling?" "I don't know," I told him. I spoke gospel truth. "Oh, come across, Larry," he said. He knew it was my habit to know why I traded. I had sold 1,000 shares of Union Pacific. I must have a very good reason to sell that much stock in the face of the strong market. 59. Reminiscences of a stock operator. I don't know, I repeated. I just feel that something is going to happen. What's going to happen? I don't know. I can't give you any reason. All I know is that I want to sell that stock, and I'm going to let him have another 1,000. I walked back into the office and gave an order to sell a second 1,000. If I was right in selling the first 1,000, I ought to have out a little more. What could possibly happen? Persisted my friend, who couldn't make up his mind to follow my lead. If I'd told him that I had heard UP was going down, he'd have sold it without asking me from whom I'd heard it or why. "What could possibly happen?" he asked again. "A million things could happen, but I can't promise you that any of them will. I can't give you any reasons and I can't tell fortunes," I told him. "Then you're crazy," he said. "Stark crazy, selling that stock without rhyme or reason." "You don't know why you want to sell it." "I don't know why I want to sell it. I only know I do want to," I said. "I want to like everything." The urge was so strong that I sold another 1,000. That was too much for my friend. He grabbed me by the arm and said, "Here, let's get out of this place before you sell the entire capital stock." I had sold as much as I needed to satisfy my feeling, so I followed him without waiting for a report on the last 2,000 shares.